possibility of OPEC cutting back oil production has been raised after the value for their crude has fallen below $100 a barrel for the first time since February. Whilst global economic uncertainty continues, the price of OPEC's oil has fallen to the lowest level in almost 8 months. A lower price increases the possibility of the Organisation of Petroleum Exporting Countries cutting production, after raising it for 5 months in a row this year. The OPEC price has also been impacted by the possibility that many oil companies in Libya will return to levels of production not seen since before the conflict in the country. The OPEC basket price is down almost 20% from its highest level this year, pushing it closer to the point at which it would be decided oil is a bear market. OPEC nations like Saudi Arabia increased their production earlier in the year to offset lower levels of Libyan oil output after the rebels rose against the Gaddafi regime in the North African nation. In August, Saudi Arabia produced nearly 10 million barrels a day, which was the most since 1980. And whilst demand remains high, global output may stay near those high levels. However, if the global economy continues to worsen and has a negative impact on demand, OPEC may have a difficult production decision to make, according to some commodity strategists. The difficulty is balancing out demand versus supply uncertainty. Economic forecasts have been deteriorating, but you have supply-side uncertainty as to when Libya will return. Whilst in February the Saudi oil minister said prices of between $70 and $80 a barrel would be fair, it is now expected OPEC will not allow the price to fall below $90. Some countries in the Middle East have increased their social spending as they try to suppress unrest which saw administration changes in Tunisia and Egypt. Kevin Norrish is the Managing Director of Commodities Research at Barclays Capital in London. If anybody cuts, it will be Saudi Arabia. They need a break-even oil price of between $90 and $100 a barrel, and that's gone up a lot because of the extra money they're spending to placate the unrest in their country. Whilst currency traders may want to keep a close eye on oil prices and developments in Europe, it appears the US Senate legislation we reported on in Monday's press review has run into trouble. The bill, backed by a majority of the House in the US Congress, would aim to force China to allow their currency to appreciate in value. However, the Republican leader in the Senate, Speaker John Boehner, has said it is pretty dangerous as it currently stands. The press review will return on Friday, so stay tuned to Dukascopy TV. Goodbye.